Seeds of Wisdom RV and Economics Updates Thursday afternoon, the 6th of November 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good afternoon. Dinar recaps, the golden barometer. Why safe haven demand signals a monetary transition. Gold rallies above $3,980 per oz as confidence in fiat softens. Good afternoon. Dinar recaps, the golden barometer. Why safe haven demand signals a monetary transition. Gold rallies above $3,980 per oz as confidence in fiat softens. Context. Investors are returning to metals as global equities wobble. Gold rose greater than 1% to $3,983 per ounce. Silver tracked higher amid festival demand in India and a weaker US dollar. Analysis. Persistent gold strength despite stable growth signals currency distrust. BRICS central banks continue steady accumulation, hinting at reserve realignment. The gold-to-digital bridge, tokenized bullion or gold-backed stablecoins, is gaining institutional interest. Implications. Metals could become the collateral base of a future hybrid monetary regime. As CBDCs expand, asset-anchored trust mechanisms will be vital for legitimacy. Gold may transition from hedge to foundation of a rebalanced global system. This is not just politics, it's global finance restructuring before our eyes. Dollar dominance tested. Are FX markets preparing for a digital transition? The US dollar remains firm, but central banks are building exits. Context. The US dollar traded near multi-month highs as strong employment data lifted Treasury yields. Yet, major analysts caution the move may be overextended, while Asian policymakers express concern over currency volatility linked to speculative AI-driven flows. Analysis. Dollar strength now reflects yield differentials more than global trust. Emerging nations are expanding bilateral settlement in local currencies, global currency reports. Digital infrastructure, BRICS Pay, e-Sini, digital ruble, bypasses traditional clearing systems. The next FX battleground will be interoperability, not rate policy. Implications. Expect the formation of multi-currency digital baskets resembling a modern SDR. Reserve diversification could erode dollar primacy within a decade. The future of FX may lie in tokenized settlement units, enabling real-time cross-border trade and forming the core of the next monetary order. This is not just politics, it's global finance restructuring before our eyes. BRICS GDP growth surges as G7 economies stall, a structural shift in global power. Emerging market momentum reveals the early architecture of a new financial order. Context. The BRICS bloc, Brazil, Russia, India, China, South Africa, is now expanding at more than 3 times the pace of the G7 economies, marking one of the sharpest growth divergences in modern history. According to IMF projections, BRICS GDP is expected to grow 3.8% in 2025 and 3.7% in 2026. G7 growth is forecast at just 1.0% in 2025 and 1.2% in 2026. This rapid acceleration in BRICS economic output is being powered by strong domestic demand in India, 6.6%, and China, 4.8%. Expanding trade corridors across Asia, Africa, and Latin America. Rising investment in infrastructure, energy, and digital payments. By 2025, BRICS nations are projected to represent 41% of global GDP by purchasing power parity, compared to just 30% 2 decades ago, a dramatic rebalancing of economic gravity. The divergence between emerging dynamism and developed stagnation reflects deeper structural realities. Demographics. BRICS nations benefit from younger, growing populations, while G7 economies face aging workforces and shrinking labor pools. Debt burden. Western nations carry historically high sovereign debt levels that constrain fiscal flexibility. Trade diversification. BRICS economies are redirecting trade away from Western dependence, building South-South linkages and local currency settlement. Institutional independence. The bloc's development banks and digital payment systems are designed to operate outside of Western-controlled financial mechanisms. Analysts like Rodrigo Cesar of the Getulio Vargas Foundation note that BRICS heterogeneity, differences in geography, trade exposure, and policy models actually enhances resilience by allowing the bloc to absorb shocks that would cripple more homogeneous Western systems. At the 17th BRICS summit in Rio de Janeiro, member nations signed a joint declaration of 126 commitments, ranging from financial reform to technology cooperation. The emphasis was on reforming international financial architecture, signaling that this growth divergence is as political as it is economic. Implications: end of unipolar economics. The G7's low growth and debt saturation have eroded its claim to set global financial rules. BRICS expansion signals a redistribution of economic sovereignty. Shift in monetary leadership. As BRICS economies scale, they are preparing for deeper integration through cross-border settlement networks and shared reserve frameworks, paving the way for alternative reserve currencies. Restructuring of global governance. Emerging nations, emboldened by economic strength, are demanding voting reforms in the IMF, World Bank, and UN systems, essential to any future reset of financial order. Prelude to a new system. Sustained BRICS momentum could catalyze a dual financial architecture, one Western, one multipolar, before an eventual convergence into a new digital, asset-backed, globally balanced system. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com